Hi, this is Max Rock with Multifamily Geeks. I'm going to make a few videos here, and this will probably be a series of 1 to probably 8 different videos on how to process the rent roll when underwriting a multifamily property. Here's the comprehensive tab inside of the MFG portfolio underwriting template. This is free for you. Download it from our website. Just go to multifamilygeeks.com. Looks like this. Scroll to the bottom and follow the directions. There's a link down here. Scroll all the way. Here it is. Open this link and follow the directions. It says click on File, Download in an Excel format, and it'll put it on your hard drive, right? Here's what it looks like. And here we are processing the rent roll. Why? Because we're going to rebuild the rent roll in step number 10 here. We're going to put in all the units for this property. We're going to put them in by square feet, the number of them, the type, whether it's a 1-1 or 2-1. We're going to do a comp code, and then we'll start to run a comparative analysis down on this worksheet. So back to the rent roll. This is messy, and we've already started to manipulate this one, but it's kind of simple enough that I can do a short video and show you some of what's going on. Because there's different, here's a unit right here. Look at this unit. It's occupied. Here's the tenant. Here's the total charge for this tenant. So notice that these 1, 2, 3, 4 lines encompass this one unit. The total rental charge is $847. So I want that up here. I'm literally going to retype 847, and then I'm going to delete out these other lines because I don't really care about them, right? You know, at the same time, I'm kind of worried about this a second. Renovation rent. I'm not sure what reno rent is. Renovation rent. And pet rent is probably showing up in other income. So I might have to exclude that actually. So that's a challenge when processing this. You're trying to get to the total charge. In this case, because these other charges may show up in other income, and here's how we tell. Let's go back to the tab here in the beginning. Let's look at the T12 here. And let's start to look at other income. Here's revenue, late fees, NFS, application, pet fees. So see how pet fees is in income? This is being taken care of under the other income portion of the P&L. So I do not want to include that. How about renovation rent? Is there a reno rent in here? Let's look. Pet fees, MTM, early termination, other rental, admin, maintenance, utility, recovery. So these are RUBS. That's highlighted. That's good. RUBS admin fees and taxes. I might put that in with RUBS next time. Security deposit, collection, laundry, application, renter, storage, miscellaneous income. So I'm not sure what that reno income is, R-E-N-O, that it's got over there. I'm thinking it's renovation income, but I don't know why you would have a renovation rent. Let's see here. And could it be possibly an upcharge because of it's a renovated unit? Let's see that. Reno rent. So these are renovated. See them right here? It's a Camellia renovated. So this is the unit type. It's nice. It's like a California open air model apartment, right? You know, a name for it, which is always wonderful. I love that kind of marketing. So these are renovated here, and there is a reno rent. So this is an upcharge because of renovation. And that's pretty cool that they're separating that for us because that helps us understand how much we can raise rents because of this, right? So let's go back, and I'm going to stop this one for now, and I'm going to go back through and correct the ones that I already collapsed into rents, okay? This is Max Rock with MultifamilyGeeks.com. Thanks. Max Rock with Multifamily Geeks again. We're processing a rent roll. So here's our underwriting tab, and I'm going to just go straight into, this is the rent roll provided. So here we go. Let's go back and open a rent roll. I did that right here. This is what it looks like raw from the broker in Excel format. If it's in PDF, I'd ask them for one in Excel. It's just too hard to process. I don't have a converter. Let's put it that way. So then here's my underwriting. let's see here. Let's go to the comprehensive tab. This is what we're going to fill in. We're going to put a tab, and notice I put a rent roll here already, but I started to mess it up and it's getting kind of yucky. So I'm going to go in and put a new tab right here. I'm going to rename it. I'm going to call it rent roll second try. There, how about that? Rent roll second try. All right, then I'm going to go back to my rent roll. I'm going to highlight the whole thing here with this highlight all tab, right? It's the square right here between A and 1, or a rectangle actually. Copy it. Oh, do right click, copy. Go back into our underwriting to the tab we just opened. Go to this square here, say paste. Oops, if it does that to you, click here and say control paste, which is control V, right? Or Apple key V if you're on a Mac. Give it a 30 seconds or so here. What happens is if it's a large file and on the internet, my connection may not be so great. Wants me to wait, please. There we go. So it took a second there. Now here's the raw rent roll again, right? So then I'm going to go back and I'm actually going to delete out this other one because I don't want to get confused by it. Let's delete this. Heads up. Gone. There we go. Here's the second try. Highlight the whole thing and do format, clear formatting right here. Clear format. You can also do control backspace or control backslash, right? There we go. That removes everything. We're in 8 font. We may remove some of these zeros later, but that's pretty good. And then what we'll do is start to collapse some of the columns that don't mean anything to us at the moment. Like I don't care about the balance, deposit held at the moment. I care about them later. Expected move out. I don't care about these, so I'm going to collapse these columns down like this. Bing. So they're still there. I can reopen them, right? Just expand them. What's this? This says unit details lease term, 6-month or 12-month. I don't care about that at the moment. Unit details effective rent calc. I don't see anything in that column. All right, let's scroll down. This is 116 units. You can see all these extra rows will have to be removed, right? Okay, so that's good. I'm going to collapse this too. All right. So now let's start to look at these. Here's, this is some cool information right here. This is telling me that everything below this has been renovated, and I like to do this with another underwriter. Right now Lonnie's working on this one too. I appreciate that, Lonnie, and because Lonnie pointed this out. And what I'll do is start to insert certain rows to help myself, like right here. I'm going to want to call this renovated, R, okay? And that means these up here, and camellia, I'm probably not saying that right, but that's the name of the type of unit. So this is probably or non-renovated. I'll just use a U for this. That'll help me sort out which is which. Right, I'm going to fill these into these rows. And if you know a better way to process the rent roll, I'd love it if you tell me, because this is my old-fashioned way and it takes me forever. Now this is square feet. I don't need all the zeros. I'll start to collapse some of those out right here. Okay, that'll take care of that. This looks like scheduled charges. This looks like rent. Okay, so I'm going to name this rent. This looks like market rent right here. I want to rename that. Now, let's look at a typical unit. It's got a lease rent, amenity rent, and a total charge of 700. Here's where we start to get into difficulty. Is the amenity rent being charged in the other income on the T12, right? So go back to the T12 and start to look through other revenue. So we do have some things here like pet fees. Right? If we see pet fees show up, that's going to be other revenue. It's included in the P&L, so you don't want to double include it in the rent roll analysis. So we don't want to include some of these incomes. I don't know what that amenity charge is, but I'm tempted to say, I wondered if it could be possibly a RUBS charge, right? A chargeback for utilities. I wonder if it could be some other thing. Maybe a storage income would be an amenity, right? Maybe, I don't know what MTM is. Maybe it could be an internet fee or something. That could be in those amenities. So I'm tempted to not include those in my rent roll analysis. And the problem with this is if you call the broker and ask about these details, they can find them out by calling the seller, but it's just too annoying for them a lot of times. So it becomes a little bit difficult. Now here's one that's simple. See this one? The total charge is $740 and the lease rent's $740. I can start to delete all of these out right away. Boom. Anytime the price matches, I don't have any questions. So they're going to go, and we'll start to collapse this. $759. Let's delete out this. Boom. Okay. Here's our renovated unit types. Now, they've got a renovation rent in here. So they are getting an $80 surcharge for a renovated unit. That's nice because now they're telling us when we go and do our underwriting and we renovate, let's see what we have here. We said we were going to charge $100 extra per unit, and we were going to upgrade 33 of the 116 units. This is being spread across the 116, so our underwriting might be generous right now. We're going to have to go back and look at that. It is a 7.5% cash on cash at the moment, which is why we're going to the next level. That's why we're taking it to a comprehensive underwriting, because we want to look at the 5-year pro forma. And in fact, this underwriting template, you guys, lets you set the number of years you want to hold this thing. All right, so see how it's set at a 5-year hold right now? You can do 1, 2, 3, 4, all the way up. You can do between 1 and a 10-year hold on this. Anyway, I'm off topic because I'm trying to avoid the work of the rent roll. But we'll see what we're going to do with some of these on the renovation rent. But see this pet rent? I am not going to include that right there. All right, so I'm going to avoid deciding what to do about that for the moment. Let's just deal with these where it's easy. I know I can delete out this one because it's the same. I know I can delete out this one because it's the same, right? And we do have, so Lonnie's dropping in U here. See how she's doing that? I didn't do this yet. She's doing that. We're working on the same document simultaneously. This one's renovated there, so she's marking in renovated. I appreciate that. Thank you. That'll cut the time on this, and it's good if we both work together because she pointed out to me even some of the basics there. Lease rent. Here, look. Amenity, lease, reno, application. Or no, I'm reading it wrong. Appliance rental addition. Okay, so this should not be, this is back in the other income. I saw appliance in there. So I cannot count this $50 in the rent of this unit. So this whole thing is not running for $11.97 right now. All right. So here's a vacant unit. Let's highlight that. We need to know all the vacants. That'll go into our analysis. And let us keep working. I'll come back and show you this as we get further down the road, okay? Max Rock with MultifamilyGeeks.com. Max Rock with MultifamilyGeeks.com, processing a rent roll. I'm going to do some other things here. I'm going to insert a column on the left. Okay, so what I'll use this for is start to number. There's 116 units, right? So as we start to roll through these, I need to know, and I'll just keep renumbering it as I go. You just do 1, 2, 3. 1, 2, 3. Copy this, and then you just go zoom all the way down, and it should, if it's doing it right, count by, just count up from there. And see all the extra spaces in. So that's all spaces we're going to delete out as we process this rent roll. Here we are, the last units here. It's all the way up at 232, and I'll probably take this. Maybe this is the issue. Let's go to the right. There we go. So a little, wait, what the? Oh, what kind of numbering is that? Okay, so that's no good at all. Let's go back and try this one more time. 1, 2, 3. Here. 1, 2, 3. Come down to here. Huh. Let's make sure it's a number format, because that's what can happen. It can become corrupted. Get rid of the zeros. 1, 2. Let's try it again. 1, 2, 3, 4. 1, 2, 4. Okay, it should follow this pattern. There we go. Now let's continue it. So what happens is it's not reading it as a number format, just to, I'm kind of glad you see how things go when you're working on a spreadsheet, right? It doesn't always go smoothly sometimes. So now we should be up to 347, and we'll start to get rid of those as we go. So this one's got different things involved in it. So here is a renovated unit here, R, right? And I know it's renovated because it's got a renovated rent. I'm going to include this 80 with my lease rent, and I'm going to come up with 820 as a total rent charge for this right now. So I'm going to put 820 here. And then I'm going to get rid of these other lines, these other rows they're called. Okay, delete. So here's a reno rent and lease rent. 770 and 80 comes up to 850. So I want 850 here. I'm not going to add, let's do the 850. I'm not going to add in, and let's get rid of the zeros on these. Those bug me. 1, 2, right? I'm not going to add in storage rent because that's another income. Right? So this would be the rent for this unit in terms of what I need to include in the rental analysis. The others are going to show up in the P&L. These other things like the non-rent charges. So this one is 894 right here. Okay, and then get rid of these extra lines. And then what happens is as we start to delete these out, all the rows start to get stacked next to each other. That's good. Lease charge, amenity charge. I do not want the amenity. I want the total of 830 in here and not the other charges. So let's get rid of these. Let's get rid of these if I can do it. All right, delete. There we go. Vacant units. I definitely want to highlight vacant units. That will go into our analysis. All right. And I'll continue and check back in with you later as we start to clean things up. This is Azalea renovated. That's how we know all these are renovated. Plus there's the renovation charge. So see this one, it's got a renovation charge, 843. And let me keep working and then I'll check back and do it again, okay? Delete these rows, all right. So continuing with the rent roll analysis here, Max Rock with MultifamilyGeeks.com. So just the interesting things, and I know it takes a long time to process the rent roll in this way, but it kind of just gives you an overview of the management structure too. I love the amenity fee. Now in some cases it does look like they're giving away the amenity fee, and that should probably be charged here and then charged against it in terms of a concession. Typically concessions are one-time gifts. And this looks like maybe it is a reduction in rent roll, or a reduction in rent charge, right? So here's 80, minus 75. It looks like they're really not getting a renovation fee if they're having to give away an amenity package, right? Concessions you would like to be one-time events, like you sign up, you get a free discount for the first month, or 2 months, or 3 months, but then it ends, right? I don't see any indication that these end. So not totally sure how I'm going to handle these. What is this right here? Storage rental add-on 30. I'm going to get rid of this because that's going to be another income. Let's see this one. Month to month is another income. Month to month is other income. So charge 135. I'm going to get rid of these 2 rows. Delete. Let's see, vacant. Let's get rid of this one under. There we go. And we'll track, the vacant goes in on the actual underwriting template. I'll show you that in a second. Delete. And, lease, reno, pet, storage, charge, 890. So, here's 835. They took off 70. So I'm going to go 840 for the total rent. All right, I'm going to do some of these. I'm just going to come up with what I think it is and go from there. I'm going to do the best I can to get this accurate, but in some level I will not be able to be perfect. I just don't know enough about the structure of the way they charge. Lease rent, amenity, total. This one's going to be 829. In general, though, I love to see a property that can justify charging for amenities charging for extra services. This is definitely not a C-class property to me. I would guess even from these things right here, it's a B-class property. You just can't, depending on the tenant and what they can pay. If they can pay amenity fees and for extra services, then it's probably a little bit higher end tenant that's living in the units, and then you can make predictions about the school system, etc. You can make certain predictions from the rent roll, and or you already know that about the property, and this would just confirm to you that story, right? This is all sort of a a detective process of trying to figure out what we're looking at both when we visit the property and when we look at the numbers and documents and the management, and all those things are trying to piece together. Is it a consistent story, or do there start to be questions and red flags and things that arise? And I don't see any of that right here. This all looks good to me. It's just a matter of getting to what I can properly charge. I'll come back and show you more in a minute. Alright, so Max Rock back again. I'm going in and out, so I'll probably splice this video together a little bit. But now we're going to go back. We've removed all of the rows that have extra income. We've compiled them into, current rent versus market rent. Now we're going to check our numbering here. We got to make sure we're down to, let's see, so we need to number these 1, 2, 3. That should be enough to highlight the 3 and then extend it, and that should number us sequentially. Let's go down to the bottom. We should be at 116 units, I believe, is what this one is. Uh-oh, 112. That can't be good. Let's go back and see. Well, we've got it listed at 116 units. And the interesting thing was, let's see what they listed as here, at the bottom of their rent roll. The interesting was the OM had 2 different numbers on it, you guys. So this is where this kind of analysis is what we're looking at. It does have 116 total. Lease, employee it has is 3. Vacant, rented, and this is 3, 98. Notice rented, unrented, occupied units 110. 3 makes 6, 116. So they've definitely got 116 here. They've definitely put 116 in here. This is bad news for us in terms of processing the rent roll. We may have to start all over again if we're going down through here. 116 total units. I wonder if they're going to tell us anything about 4 units we might want to know. Let's see here. Any of these say 4? Nope. Any of these say 4? Nope. So here we are back again working on the rent roll. Sometimes your numbers won't stay numbers. Notice this went to 1%. Go ahead and just go up to highlight the column, hit format, number, and go number. That changes them all. And then get rid of the decimal places. In this case, we're just numbering the actual units. So this is a rent roll. 2 of us were working on it online at the same time, and it was jumping around. So possibly we deleted 4 of the units when we came up with, see the second try down here tab? When we came up with this, there was only 112 units. We know we need 116, and 6 of them should be vacant, we're going to find. So we did a 3rd try. I'm going to go back through it again, and part of it's for this video, and part of it is somehow I just get obsessive about these rent rolls, where I've just got to understand as many parts of it as I can. I will never understand all of them, because just different bookkeepers and systems and accountants just do things different ways. Okay, so we've now numbered every unit. Now, so numbering these, neglecting the spaces, we're up to 116. So sure enough, we've got 116 to start with here. Where is it? There we are at the bottom. Right there's the last one. And then even if we do a find feature, do find and type in vacant, we'll find the 6 vacant. I know they're there because I've already found them once. So here's a vacant. Let's make that one highlighted. Go to the next. We're going up. There's a vacant right here. Let's do this one. Vacant. Let's go up. And do this one vacant. Oh, there we go. Here's the next one. Go one more. There we go. And one more. And so we are looking for, as we cruise down through this, group one more. All right, now it's going up through the bottom of the list. So there's our first vacant, right? 1, 2, 3, 4, 5, 6. So now we're going the opposite direction. So we did it a couple times. We got a little messed up. So I'll just chalk it up to an educational video, right, where we're literally going through the experience that you're possibly going to experience. And if not, God bless you, okay? But if so, then just know that processing the rent roll can be challenging. Here are square feet. Notice there's 0 on those. I'm going to get rid of some zeros on those. And even in terms of this is the rent, I don't care about the zeros on those. Get rid of decimal places for those. That'll help us. And then let's shrink these again. These are the dates. We do not care about these. Let's collapse these columns. They're still there. We can use them if we need to, but we're going to collapse these also. There we go. We mark these as renovated. They tell us that. We've got them numbered. And now as we go back through and start to process it again, we'll get rid of these blanks one at a time and just start to collapse the thing down where we can work with it a little bit better so we can isolate what's going on. This is probably not going to happen in a lot of the cases. Maybe 10% of the time when you start processing a rent roll, you are going to find some very strange things, either missing units or extra units, all kinds of things we've found by going through the rent roll like this. So it seems like overkill, but I'm telling you, it's kind of the way you have to go. If you're going to make an offer on a $10 million building, don't you think you'd like to spend a few hours processing the rent roll and just do your best to understand as much of it as you can? Is my way of thinking, okay? So I'll check back in and show you in a minute as we get further down the road. All right, Max Rock with MultifamilyGeeks.com back again. So continuing with the rent roll, we've numbered our units. See how it is 1 through 116. That checks out. Also, I hope you know you can use Google Sheets or Excel. If you just highlight a column and a number of cells, it'll count in all directions. So notice down here to the right, see how it says count 116? So that confirms our count along the side. We don't have to go through and count and make sure they're all there. We can just go ahead and do a count to back up. Right down here on the right, count 116. Right, so that's good. We've also labeled our units. We've put in the number of 1 bedroom, 1 bath. Right here it switches to 2 twos. This is a pretty simple unit apartment complex in terms of the number of different configurations of units are relatively small. That's nice. We've marked these as renovated or unrenovated. We're looking at our square feet right here. So now we need to process some different items here. I'm going to insert, let's see how I'm going to do this, 1, 2, 3. I'm going to insert 3 to the right. There we go. So what I want to start to do is map out the different square footages and configurations. So we're going to have a switch right here. And I'm going to start to draw some lines under these. So these are 1-1s, 906 square feet, and they're all unrenovated. Notice we're staying with the same configuration, but renovated. So let's mark those out. And I'm using the line feature here to draw a line under all the cells so I can designate that it stops right there. Here's the next one, 2 twos, unrenovated. Goes down to here. Alright, let's put a line under. And sometimes I miss it as I'm going through. I'll show you how to correct it if I miss them. 2-2, renovated, come on down to, where's it switched to 1156? Right here. Alright, let's put a line under. then 1156 unrenovated, then 1156 renovated. Here it switches. All right. Now what we're going to do is start to retotal them because we'll have a total for each of the subsets. So we'll say equals sum of this column. We're going to put that in this column, and we're going to check this out to make sure it hits 116 again. So let's get ready for that. There we go. Now we're going to start to count. So in these units here of 1156 that are renovated, we're going to count these and just check the count down here. It's 10. You do not have to count them manually. Notice that our sum should start going up. No. So maybe it's not in a number configuration. Let's highlight the whole thing, say format number, and put it in a number configuration. Get rid of the decimal places. And that's more like it. Notice we put in 10 here, and the sum formula that we said would add up all those, that column there is at 10. Let's look at the next group and count that. And this one you could probably eyeball, but just to show you it's 6 of these. Notice our total went up to 16. We're on the right track. Let's total the next group. Go all the way up to the next line. There it is. It's 54 here, so we'll go back down and say 54 of these. Right. Then we'll go back up to the next area here, and now we switch to, let's count these, the next group. All right, 22, put that here. Let's count these. Okay, and 19. And we are counting the vacant ones too. That's important. We want to hit 116 again. And count these. We have 5. So now when we scroll back down, we want to see 116 total. Sure enough, 116. That's good. Now we want to do two things. We want to find the average rent. So these are the rents right here. They're charging current rents. And these are the market. Okay, so we want to find the average of both. I want to show you how to write a formula. We want to do an average if, we don't want to average anything if it's 0. So I want to find the average. Look, these are all over the place. So you can't just eyeball it, right? And you don't want to average it by hand. So you're going to say equals, to put in a formula, you're going to use average if, parentheses, highlight the range, do a comma, then say quote, less than, greater than, 0, end quote, end parentheses. All right, look at that for a second. Average if, parentheses, the range that we want it to average. And we want to average everything as long as it's not 0. If it's a 0, we do not want it averaged in there, and that's going to be the vacant unit. So this list doesn't have any, so we really don't need the average if, but we better get in the habit of it, and I'll show you why. I'll just go ahead and take this now, and it might be helpful if I move it over to the right. There we go. Let's get rid of any decimals. That might help. Good. Now we're going to go on up and find the average for each one, right? So I'm just going to copy this formula now, paste it, and it nukes out my line. Don't worry about that. Now we just have to check the range. Take out this old range from the prior one and put in the new range here of this one. Hit enter. So this has got an average rent of $991. This is $934, and they're the different types. This one's renovated. This one is, interestingly enough, these are all 3 2s. Notice that the renovated have a lower average rent. And part of it is, why is this 95 right here? Ooh, I hate that so much. Okay, that's a problem. There's no way that's renting for 95. I made a mistake there, you guys. So luckily it's the bottom, it's 3419F. I can just go back out here and look at 3419F. Here it is right here. So it's an amenity 95. We didn't put in the lease rent of 865. All right, so go back. Let's correct this, put in 865. And notice the difference in average that affects. So even a single error in this rent roll analysis can really swing your numbers, can really skew things, because you're going to come up with the average for all of them, then you're going to apply it across all of them, and if it's off by that much, I mean, look how much it was off. Let's go back. 934 versus 1,011. What is that, like $80 off or something? That's a big change from a single number not involved. Okay, so 991. This looks okay, what we got now. And, you know, so you're catching mistakes. I'm not the best analyzer of these statements, as you can tell. But I can do okay, I guess, you know, and especially if I'm just kind of tracking for errors. Now, see how there's a 0, a vacant unit and a vacant unit. We do not want that. You see how much it would skew the rent to have that in there. We're going to go all the way up. This is 54 of them. In fact, there are 5 vacant units in here. We do not want those zeros, so that's why you use the average if command. Right, so $883. And notice the thing that caught my eye was, you know, the unrenovated rent was higher than this renovated rent, which doesn't make any sense. So 883 is a renovated rent. Let's go up and compare it to the next one. Let's paste the same formula here. Let's correct the range for this one. Let's go ahead and redefine it. Okay, there we go. There we go. So now it's 844 for unrenovated versus 883. So they're taunting, you know, an $80 increase. It's not really that. It's not really $80 your increase for the renovated units. And part of the value add here is they've taken it away by doing the renovations themselves. So they've only left for us 36 units to renovate. Now what they're saying is you can go back through all the other ones that are already renovated, and you can do a micro repositioning of those. Put in just nicer countertops, like an engineered countertop, and you're now going to be able to charge another $50 or something, right, is what they're telling you you can do. I'm not sure I believe it, which is always the challenge with trying to predict, you know, what you're going to get when you renovate, is trying to be realistic. The broker is potentially incentivized to make things look better than they are, and we're potentially incentivized as buyers to make things look worse than they really are. So in all fairness, we're trying to be as accurate as we can about what we're buying. Let's check this one. Get rid of this range. Go ahead and do this. There we go. And there we go. So this is unrenovated at $677. This is a big difference. And renovated. And typically the smaller units, 906 square feet versus the other, which is pretty big for a 1-1. It's a nice size unit. But anyway, you're going to get higher rents per square foot with these, right? So $677, nice jump up there. $100, $110 for a renovated 1-1. We like to see that, but they only left us 5 unrenovated, right, for that big jump. All right, with this said, now we're going to repeat the same process. Let's paste this here. Now we want to know the average if for the market price over here. Let's get rid of this range, and let's put in this one. Okay, enter. I'm going to get rid of all the decimal places here. Looks better to my eye. 801 is their market rent average for these. Let's keep going back down. Now we're going to copy this, paste it here. Alright, so average if, let's get rid of this range, put this one in, enter, 880, let's paste one here, get rid of this range, should be right near 899 plus a little bit, right? 907. Amazing how one rent of $200 more or $160 more makes that jump up from 900, right? 907, it spreads across those. Anyway, very interesting to me at least. Let's go down to here. Paste. Let's redo this range. This is the one with 54. Go all the way up. There. Hit enter. So we're going a little bit slower and more deliberate here. Number one, I'm tired, and number two, I'm trying not to make a mistake. And 1127. So 1189, 1179. There we go. Okay, that makes sense now to me. First I didn't see those, and I was starting to worry I didn't have those in. let's redo this range here and here. All right. So 1201. So now's where we start to enter these into, we're finally to a point where we can enter these into our underwriting template. And the amount of time it took, like if you see the time on my clock here, I redid this 3 times, so it's not fair to say I spent an hour on this, but I spent an hour on this. But I also did it a second try, and I also did a first try. Right? So I'm going to delete this one out. Heads up, gone. Yes, go ahead. So what we're dealing with here is, you know, for me at least, it takes me a long time to process the rent roll, but I do feel like I learn a lot about the property, and I have found, I'll tell you one thing right now I found, look at this. The total square footage on this is 120,496. Go to the rent, go to the OM here and hit search. Here it is up here. Let's do rentable square feet. Rentable. No, it doesn't show up. 146. I'm going to show you what I found. So see up here, gross square feet, 146,000. So they're right, gross square feet is 146,000, but we don't care anything about gross square feet, you guys. We care about rentable square feet. And they've got it in here. If you search a little bit more, they've got it here at 120,496. That's the right rentable square feet there. But when I went back to our underwriting template, and multiple people underwrite on our teams, right? So we're always trying to check each other. But this was in here, this rentable square foot was in here at 146,056. So, you know, yeah, they're putting that in the OM as gross rentable square feet, but we really need to key in on what because all of our rents are based on this rentable square footage. See this over there? The seller is charging 85 cents a square foot for rent. We're saying we can raise it to 94 cents a square feet. If this is set on the wrong square footage, say it's 146,056, notice how that skews this. It looks like we're already charging 70 and we need to go to 78. That's a big difference in how much you're charging. So let's go back to it and keep it the way it is. It's just those little things that make your underwriting either accurate or inaccurate. And all of us, you know, there's 30 data points here, but we're also rolling through that OM, and the broker's not being disingenuous, I don't think. They're just listing gross square feet, not a very usable number. I don't care about gross square feet. I care about rentable square feet, right? I'm buying an apartment building. But they're not necessarily, you know, they're not deceiving us. It's us trying to process what we're reading and putting that into the template accurately. So let's start going. Let's go up to the top here. Let's get on with it. So the first thing we have here is the template goes by square feet. So 906, there's 5 of them, and they're 1-1s. (906)5 1 1, and we're going to code it. And I would put a 1-1. Let's put a 1-1U here to show that it's unrenovated. All right, and in this comp code right here, it'll be 1-1 without the R. All right, it starts to populate some of our numbers, and now we're going to go back again, and you're going to look right here. It's 677 and 801. What are we saying? So this is a 906 square foot unit. There's 5 of them. They're unrenovated. They're 1-1s. Here's our comp code. I'll show you that in a minute. Here's what they're currently running it for, 677. Here's what they say the market rent is. Right? We're going to do our own analysis right here. We're going to see if we agree. This is going to average up what they're renting for, 75 cents, and that should match what we had back on the quick underwriting template. Pretty much. It might be. This is a weighted average, so it might be a little bit better over here. But we should be kind of close. And then this is the market rent. We're trying to look at what they think this is, 88 cents, right? We said we had to go to 85 cents, so we're tracking that. Then we're going to track the comps here for pre-renovated and renovated and see if we agree with them also. So on we go. 906, 19, 11 renovated. Code it as a 11R. That's important for us. 785, 880. Okay. 1056, there's 22, and it's a 22. 22 unrenovated, and this thing is just a 22 is the way that codes 22. 844 907. And I forgot something up here. See this 906 renovated? There's one vacant. 906 renovated. Come over here. There's one vacant. We're going to track the vacants, and we're going to track the employee units. We don't like those at all. We don't like either of those. We want to clean up all that. So we do see there are 4 vacant units in this batch, but let's see, 1056.54. We're going to code it as a 22 renovated, 22R. These are renting for 883 and 992. Again, that's the renting. Current rent price is 883 average, and the current market they believe is 992. That's a long way to be below what you think the market is, right? You think there's $110 sitting on the table and you're not going after it. Why? Because they're locked into leases. They can't just raise rents instantaneously. They have to wait for leases to be up, wait for tenants to move out, and that's what creates a loss to lease, the difference between what we're renting it for and what the market is for the unit. So 1156 now, 6. And this is a 3-2. This one is unrenovated, so that's just a 3-2 here. $991 and $1127. Wow. Again, a big difference there between what they're charging and market. All right, so let's see. 1156 is a 3-2 renovated, and there's 10. So we'll code it as a 3-2R. There we go. Try. All right, so 1011 and 1201. There we go. So now we have the existing rents in and what the seller thinks the market is. That's why these are all the seller's numbered. Okay, now we're going to start to do our analysis. Oh, we forgot. There's 4 of these. We forgot the vacants. Sorry. These are all the 1056 renovated. 2, 4, wow, 2, yeah, 5. Makes sense. So 5 we have renovated. Here we go. This one across here. And that should be 6 total. That's a 5.2% vacancy rate. And then we did find only one employee unit where they're giving only $200 discount. That's great to see so few of those. So we're going to try to code this same one. I don't actually know if this works yet. I'm going to say this is 0.25. Does that work? Well, there's no decimals, but look, I gave it it shows 0.25 down here. It doesn't have enough. If you extended these, all we have to do is go like this. Nope, wrong one. Sorry, please hold. There we go. And give it 2 places. There we go. Give this one 2 places. Just expand it on the, right, we can adjust this thing. 0.22 is the, what they call non-revenue units, right? And that's only because it's a quarter of the rent of one unit. That's why I put in 0.25. So this works that way too. I actually have never done that before, but that's because normally I see full units being given away to employees for free rent. Alright, so next starts the comparable process where we literally go into the comparables. And for me, it just gets easier to open up 2 windows here. Let's put their OM here. Not define it here. Rent comparables. Here we go. There we go. Alright, so here's the subject property, and this is great when they drop this in for us. We don't always have this. Sometimes we have to build it by hand. Other times we've got a CoStar report. Other times we're literally going to apartments.com and looking up units right next to this one. That's why we've got the address right here for the Benton. Okay, we don't. I stand corrected. Anyway, we'd put the address there and start to go and find units. So let's look at the first comp right here. It's number 1. Let's look at it on the map. That's really close, you guys. For now, let's check the dates, but at least proximity-wise, we're in the right area, okay? So here's a 1-bedroom. Now, I don't like it. They're not telling me baths on this. So here we go again, where it's hard for us to nail down what we're actually looking at. But let's assume it's a 1-1 right here, right? 2, I don't know. This could be a 2-1, and that would affect because ours are 2 2s. And this could be a 3-1, and ours are 3 2s. So sloppy work. The broker had it when he put it in. He just didn't put it in. I say he. The broker, they, just didn't put it in, right? So let's do the best we can. Let's go to the 1-1 here. At the moment, we do not think this is, let's see, rents denote renovated units. Rents denote renovated units. It's got an asterisk there. Are there asterisks on some of these? So I'm not totally sure. I don't see any asterisks up here. Don't see any asterisks up here or on these others either. Are none of these renovated, or I'm just missing it? I'm probably missing it. So let's see what we can do. 1-bedroom, 1-1 non-renovated. Let's start with this. Let's call it Hampton Place. Alright, Hampton Place has a 759 square feet for $936. $1.23. That's a good sign. This property is from 1972 / how far away is it? It looks close. Close. Okay, there we go. 1972 close. Yes, I'd like to count this. You can not count it if you think it's not a good comparable. You could leave it off the list, or someone later can go back and say, no, don't count that, right? But for now, we're definitely counting this. This looks like a good comp for a 1-1. The rent makes me think it might be renovated, though. Let's try a 2. Here's a 2. Let's call it a 2-2. I don't know if it is or not, but let's go ahead and try it. So Hampton Place, we'll put down here. This is a 944 square foot at 1103. Again, $1.17. And this is 1972 again. Close. And I'm going to count all that for now. There's a 3. Let's call it a 3-2 to call it a comparable. Otherwise, it won't match up on our scale. And I might end up moving these. Might end up turning them off here and then moving them over to the renovated if I can figure out that these are renovated. They've got this thing that says denotes renovated units. Maybe all these units are renovated is what I might be figuring out here, right? And you might have figured it out ahead of me. So let's go ahead and do this one. This is a big unit, 1449. Wow, that's a big unit. 1413, that's going to be around $1 a square foot. 1972 / close. All right, so that's what we've got so far there. Let's go across and look at Lorna Place here. 1 bedroom. These might all be renovated units. If they are, I'll be hard pressed to go back and find comps for non-rent comparables. That renovated 2009, that's us. Denotes renovated units. Number 4 and number 5. I'm just trying to read anywhere if they're telling me that these are renovated or not on these comps. Let's go to Lorna. Here's a 1. Let's call it again a 1-1. That's probably a safe idea. Lorna Place, 1-1, 700, 788, nice. 1973 / close. Does it say what year it was renovated? See this one, how it says renovated here, 2011. So we're going to call those renovated, but these were not. I don't see a renovated on these. Right, so let's keep going. Here's a 2, and there's 2 different sizes. I'm going to put them both in the 2 2s. Lorna, Lorna Place. All right, first 2 2 is 900 at 960. $7, still good. 1973. Close. I like it. There we go. Lorna Place has another one there that I'm going to call 2-2. That's $1. And Lorna Place, by the way, just to show you, number 2 is right there too. I mean, they're literally like blocks away from each other. So I would argue these are pretty good comps given the years. This one is, our subject property is a 1973. This is great. These all look like very good comps to me at the moment. All right, then we have a 3. I'm going to call it a 3-2. Let's put it here. And again, if they don't give us this kind of information, we can spend a lot of time building this worksheet down here for rents. And notice it averages the rents, and then the underwriter has the ability to override the rents if they think this is too low or too high, and the underwriter has the ability to turn them on or off, depending on how they feel about what's going on. All right, let's do a renovated one. So let's come over to this side of the worksheet. Let's go to a 1-1R. So let's pretend this is a 1-1R. We're going to say that this is Hills at Hoover. The square feet here is 716 and it's $899, $126. Love to see that. 1972 / close. Let's check number 3. All these are right there. Perfect. It's across the freeway, which could be a factor, but at the moment, let's keep going. They've got a 2-bedroom. We're going to call it a 2-2 for us. 2-2R. Here. Hills at Hoover. 1,073 for 1,050, below $1. 1972. So I would argue not much more money for a renovated, but it was renovated back in 2011. In all fairness, that's 10 years ago. I don't know if that could be called renovated. For me, if it's 3 years or more, I like to see it in the last 3 years to call it renovated. Back then, renovated 2011 is just telling us when it was renovated. I appreciate them doing that, right? but it's probably not a very good comp to show renovated prices in the area. And sure enough, the prices look more like 1972 slash Cross Freeway 2011 Reno. Okay, that might help us, and I might even go copy. Let's paste this comment in here so if somebody else is reading this. Okay, let's undo that. Just easier to type, I guess. Alright, so that's good. Does that start to generate returns for us? Yes. So it's taking those prices and averaging them. What else we got down here? There's two more comparables. Renovated 2014, renovated 2019. I'm going to like this one, and I might end up turning the others off. But notice we're starting to get IRR now because we actually have rents in for pro forma. We actually have rents in for renovated units. All right. So we're getting a 10.7 LP investor return and a 12.88 overall project return. Let's do a few more of these comps and see if it affects anything. Here, I'm going to call this renovated 2014. That's so long ago. Let's call it non-renovated, you guys. Let's see, a one bedroom, because it's so long ago, this would be a Elevation Hoover, all right, 692, 800, 1972. Let's call it 2014 Reno. Let's put this one in here. Elevation Hoover, 2001, less than $1. Yeah, so in all fairness, the one we put into the renovated over there, we might move back over to the other side of the fence here. So Elevation Hoover, 1172, more than $1. Okay. That actually brought our returns down a little bit. Okay, let's go over here now. This one's renovated 2019. This is, I would say a better comp for the renovated side of the scale. So we have a one bedroom at Element Hoover, 780 for 853, $1.09. It's not any lower than the other one. So this is a 1975 close 2019 Reno. All right, two bedroom, two bath. Let's put this one under. And we don't know the baths, so this could be a little bit misleading here. This is Element Hoover. The Hoover area is a nice area. That's why they're all mentioning it in their name. Rent 71 cents. Wow, that's low. That is not going to help our numbers right there. Sure enough, our IRR is dropping. Okay, and a four bedroom. I'm going to list that under the 3.2, all right? Because, well, it's not going to help anything given the square footage of 1650. That's bigger than some people's homes, okay, in certain parts of the country. So let's see, 1650, 1387, 84 cents, 1975, close, 2019 reno. All right, 93 cents, 84 cents, and $1.17. Okay, so that's going to start to drop these in, and the more comps we get, the more likely we're getting some accuracy here. So you're up to 92 cents on your renovated units. And just to show you quickly, let's expand this. Go back to our quick underwriting. Let's see here. Go back to our tab for quick underwriting. We said that we were going to get 94 cents. Look at that. So it looks like the comps support the 94 cent notion here. The comps look like they definitely support the 90, right here, 92 cents. Well, we're a little bit under, but 92, we're headed in that direction. All right. So it looks like $1.08 interesting pre-renovated. That's an interesting idea. Yeah, I wonder, what happens is you're looking at these over here generating, look, $1.17 to $1.17. The rents being generated from what we call the non-renovated units are just as high as what we call the renovated units. We may not be accurate in that, you guys. This is sort of a, and look at this. Look at the non-renovated generating $1.07 and the renovated generating 84 cents. I'd be tempted to leave things non-renovated with this kind of data, right? But what it means is probably we're going to have to do more research and figure out whether we can move some of these over to the right side of the equation. If we can, it's only going to get better. If we're thinking we get this for non-reno and it's really reno, right, and it moves over, that's only going to help us in our renovation strategy. Now, the other thing we have to make sure we're mapping out is how many of these renovations we do in the first year. All right, so let's go ahead and say here, let's do 30 in the first year. So let's do 5 of these right off the bat. And these you're going to have to mark as which ones are in place renovated. So 19 are renovated here. These 54 are renovated here. They are not available for renovations right now. And that's not really fair because we can do the other type of renovation on them, the micro upgrade on them. So I'm actually going to take these out. This is for a different purpose. We're going to have our own purpose here. Let's take those out. Let's go ahead and say we're renovating 5 of these. Let's do 30 a year. 19 of these, 22 here. How many are we up to? 24. Nope, we're up to 46. Let's put these back. 24. Let's do 6 of these. There we go. So 30 of these renovated. Let's go through the next year, year 2, do 16 and 14. We'll do 30 more. And let's go through year 3 and what's happening is our IRR is shrinking because our comps showed us that the renovated units were lower than the non-renovated. That's what's happening right now. So it's modeling it accurately for what we've given it. All right, let's do 30 of these. It's going to go down even more, negative. So that's a little bit of how to fill this out. Now we're going to start to tweak, and we'll probably go back and reanalyze, call the broker, and talk about the comps a little bit and go which ones are renovated, which ones aren't. I have a feeling some of these on the non-renovated side are going to move over to the other, and that's going to correct this again. We're going to get a little bit more accurate as we delve into those different comps, the Hampton Place, the Lorna Place, the Elevation Hoover, as in the Hills at Hoover and the Element Hoover. As we find out more about those comparatives, we'll get better numbers here, right? In fact, I would be tempted as the underwriter right now to say, I don't think this is $1.17 here, and I think this might be more, right? So I think really here, this might be more around 95 cents is what everything's telling us about existing rents. So even if I decided to modify this, and I wouldn't do it right now, I would find out more information first, but let's say this is $1. I'm going to adjust that. Let's go down here to this one. This was $1.07. No way this is under $1.07. I might even say this is $1.10, right? based upon what I find out, $1, and I would probably say this is more like $1.05 here. And that's probably more like what's really happening once I look into the comps. It's just not really possible to have your renovated units moving for less. I just have them on the wrong side of the worksheet. But now you can see our IRRs jumping up to 10.49 for the LP investor and 12.44 for the project returns. We're also going to start to go back in here and answer some of the question. Notice our square footage checked out, etc. We'll look at these later. And 13 million is our price, even if you went to 12.5 here, 12.500, 1, 2, 3 here. We jump up to a 12 and 15% return, right? Then there's some other things we can do, like let's try turning off the refi. Let's say no. It drops, so let's keep the refi on right now. That's going to say Wi-Fi. Okay, here's our years. Here's our 5-year hold. Let's just try a 6-year hold. That definitely bumps it up. Let's try a 7. And it went a lot less there. Let's try an 8. Okay. I would not go beyond 6. I would probably stay at 6. Let's see. Do I have my taxes right? I think so here. 100%. 0.8. We'll check those later. And notice the options on cap rate. We always try to predict what's happening with caps, and this would be even more conservative to say we have a purchase cap, a refi cap, and an exit cap. It's going to take a certain number of caps and add them in per year. So say you're refining 3 years out and I buy it at 5.6, I'd like to come up 0.75 higher, and that's what's happening here. And then if I go ahead and sell it in the 6th year, that's 3 years later, I'd like to come up another 0.75. All of this is an effort to stay conservative in predicting the future, which is so hard for us to do, right? So even right here, you'll see that exit cap coming in at 7.14. Other things we can adjust, like maybe we're only going to do a 20% split up to the above 8%, right? It's a 7% pref below that. Above 8%, it's going to 20/80. Above 10%, and maybe this is even, we'll go to 12 here, above 12%. And that'll start to help the returns for the LP investors possibly too. Some other things we can examine are upgrades. Right now we have 116 units at this. What we've really got here is a different situation. We have 33 and 83. We have 33 at a full renovation. Did I say 83? 33 and 83. And then the others at a micro, the existing at a micro renovation. That actually bumps down our return a little. 116, 116. I'm going to take these out. There we go. That bumps up our return. I'm not going to install washer dryers for that. 7.1. And now we're starting to play. Now we're starting to tweak the actual underwriting and see where we stand. We'll also start to cruise on over and inspect the expenses, right? Vacancy was at a 5.2. We've got it at a 6. Concessions was a 1.4. We've got it at a 1. That almost is a wash. We've got bad debt non-pay at 5. They've got it at 1.5. Let's say we went to 2% here. That bumps up our return to 13 and 15. And what we're doing is matching theirs. And if we're coming out of the pandemic and they were able to stay at 1.5% bad debt, we ought to definitely be able to stay at 2 or below. Let's check the expenses here. 350 is good for insurance. We definitely need more. I would match their number for payroll. They've got low numbers for repairs and make-readies. I would stick with ours. 250 for general and admin. They've got $500. That's a lot. I would want to find out why they have so much and match it until I understand why. Now this is starting to kill our returns if I'm coming up to theirs. They've got a 4.1 for management. Well, let's match it. All right, 4.1. 163 is their beginning utilities. Remember, the pro forma will bump those up. 100, 400, 15 pest control. I've got 400 for contract services. Then I would probably zero these out just because I've got a lot buried in there already. Right? Let's zero these out just to be fair. Come back up a little bit on our return. All right, here's the rubs kick in. And here's the pro forma. I've got physical vacancy at 6%. Theirs is lower. I would go lower on this. So we'll go 5 here. That's going to give us a bump. Concessions, 1. Yeah, they were a little bit higher. Bad debt, 2. Yeah, I'd be tempted to do 1.5 here. Yeah, it repeats it throughout. All right, well, not bad right now. This is a definite maybe, this project, but what you can see is how we process the rent roll, that long process of going through the rent roll to sort it and to figure out what goes then into the comprehensive tab in terms of rebuilding our own version of the rent roll to see what we believe is happening with these rents, right? Basically speaking, we're saying we can come up from 83 cents to some higher number at renovation, and the question is whether or not we believe that given the comps that we've got. Okay? Hope this helps. Max Rock with MultifamilyGeeks.com. Thanks.